Suresh Mahadevan joins us now. He presents UBS Security. Suresh, good to have you back on ET now. Thank you for joining us. Suresh, Indian markets are moving from strength to strength. And given the way our triggers are stacked up, do you think we are on course to make a new high in this quarter itself?
Yeah, good morning. Thanks for having me on the show. I think, certainly we are very constructive on the Indian market. And I think it's a combination of several things like, globally risk is on, as you, I think, earlier mentioned in your show. And also, I think it's also a factor of how probably interest rates are perhaps headed lower. And also, I think some activity from the government in terms of reforms. So clearly, I think we are constructive on the market in terms of how much can it move. I do think that, we are trading probably below our long-term averages in terms of PE, price to book, etc. So I think, a 10-15% increase from here is quite possible. And, I don't know whether it's going to, it probably may be front-loaded given, how liquidity is flowing in. So I would say a 10-15% up move from here, current levels is possible.
Suresh, so what are the risks which would actually make you cautious on your assumption of a fresh high in the first half?
See, I think the risk with respect to India particularly is, we are a big importer of global commodities. So I think, if the prices flare up quite a bit, then that is perhaps a risk. The second is with respect to government, clearly, ahead of election year, how populous we are going to be really on the budget. In fact, our view is that, the budget may, if at all, surprise on the positive side. But, having said that, I think the probability is, there is also a probability that it could surprise on the negative side. I think it's primarily related to government and internally, and externally it's probably related to, high commodity prices or, and I think, if you look at the past when Indian markets have done very poorly, I think it's when globally risk is off. So any event that leads to that, I think then people as a knee-jerk will just try to sell out of India. So I think those are the risks, I would say.
Suresh, so the bottom line here is that Indian markets are clearly hostage to global cues. If globally there is liquidity, we will go up. Globally, if there is liquidity which is receding, we will come down. It's not about something India specific or something about, Indian equities per se.
No, I wouldn't completely agree with that. The global liquidity obviously helps, but I think we still have to compete with other emerging markets for money, right? And I think in that context, what I would like to say is, speaking to investors, it seems to me that India is in a decent spot with the rate cycle still having plenty of scope to come down, with economic growth probably picking up. And also, I think, people's confidence on China seems to have come off in the past year or so, which certainly is helping us. So I think, even though global liquidity may be good, if we are really bad fundamentals, that is not going to help. And I think we still need good fundamentals in India to attract and, fight with other markets to get our share of flows.
Suresh, your preferred stock continues to be Bharti. What kind of price target have you set on for this stock this year? And especially after Bharti Infratel's listing, what's your view on the company now?
See, I think we don't cover Infratel yet, so I won't be able to comment much on Infratel. But I think on Bharti Airtel, we have a price target of 425. And I think, it's primarily based on three things, I would say. One is there is clearly a change in the competitive dynamics after the auction, with Telenor, Videocon pulling out from certain circles. And also, I think Aircel and Tata Docomo even scaling down their operation. So what this means is less competition. Less competition at the margin means better pricing power, and that is positive. Second is regulation. I think the government has been sent a very strong signal after the 1800 auctions that any price is not going to be okay with the industry. So my sense is, it will be an auction-based bidding, and, if people don't want to bid, that is fine. The government will come and reduce the prices. And I also think there is another angle here, that if the government tries to do something unreasonable, then I think the industry can certainly go to the court. So my sense is regulatory has at the margin become a little better. The third reason is data will pick up quite significantly. I think data growth rates are running 20% plus quarter on quarter. And I think that's a very encouraging trend. We are a young country with smartphone penetration going to go up with falling prices. So I think that is another reason why we like. So the combination of all these three makes Bharti one of our top picks. I think the Bharti did well quite towards the late last year, and I think I hope it continues to do well this year as well.
But Suresh, do you think Bharti currently is more like a special situation stock because they have exposure to Africa? They're sitting on a fat dollar-denominated loan. So if you're making a case that domestic telecom market will improve, is one better off buying Idea instead of Bharti?
Yeah, Idea also we like, no doubts, but I think Bharti has underperformed Idea significantly, and that's why we like Bharti at the margin, and it's also the largest player. I think spending probably a minute on Africa is worthwhile because, Africa, I think the business is worth what the debt is there in the company's books. So it doesn't contribute meaningfully to the equity value, and it doesn't move the needle. And I don't think Africa is that bad to say that, Bharti will have to, there is a negative equity value associated with it. I think it's probably worth the debt. And I think the dollar-denominated debt, I think there is a particular misconception I would like to clear here. One is, this debt is primarily there to support the African business, not so much the Indian business. So unless the African currencies really depreciate, I think it's kind of okay because, this debt will be serviced from Africa, not from India, I think. So, but, obviously Bharti following IFRS translates everything to the rupee, and the translation gains and losses are basically, it's just pure accounting. It doesn't really, it's not really realized. It is not really, hedgeable or anything. So my view is that, the African debt is what the African business is probably worth right now. And so, Africa for equity value purposes, you can assume it is zero. So then you're pretty much left with the India business along with the towers business, I think.
In that same light, Suresh, you also have a contra call on Kane India. Kane India for the year 2012 has been a massive underperformer. They've got all the necessary approvals in place. In fact, there's one big approval which I think came 2 weeks ago. But somehow the stock is not capturing all the good news.
Yeah, no, I think certainly I think this is a stock which we think will see some re-rating. Certainly because I think at the current levels it's implying crude prices of maybe $75 or so. I think our long-term numbers are around 95, so there is probably significant upside to this particular stock in the coming months. Particularly so, I think if more approvals come through and if there is more visibility on their production going up, I think that will also act as a catalyst. I mean, we are quite positive on this name. I think it's one of our top 5 or 6 names out of the 145 odd names we cover. So certainly, our analyst is quite convinced that, it's a strong buy at current levels.
Suresh, why are you underweight on cement this time? Do you think the stocks have already run up a fair bit and it's now time to profit book?
See, we are underweight because, as you rightly said, I think, the stocks have done quite too well. Actually, we continue to reevaluate our stance on cement because, clearly the pricing and the volume growth, I have to admit, have surprised our estimates. So to that extent, I think, we need to completely go back and look at it. But, clearly the stocks have done very well. They are trading at a significant premium to the replacement costs. But, having said that, obviously, it takes 5 years to put up a cement plant. So there is opportunity cost associated with that, etc. So I think we'll have to relook at that call. But, I think, as you rightly said, the stocks have done quite well. And that is primarily the reason for our cautious view there at this point.
Suresh, I distinctly remember last time when we interacted with you, you were also bullish on the expensive part of the market. When I say expensive part of the market, consumer staples, Asian Paints, Emami, Nestle. Have you changed your view there?
See, we have been underweight consumer for a while actually. We have been underweight consumer, pharma, IT for a while because, obviously we select names we have been positive on like ITC. Or an Emami, we have been positive on. But, we have been running a pretty big underweight on consumers for some time now. And that is primarily to do with our more bullish view on the market, since, Chidambaram became kind of finance minister. So I think, obviously bottom-up stories are still good because certain management teams continue to deliver. But, as a sector overall, in either case, whether there is an economic recovery and markets rise, then consumers underperform. If the economic recovery does not materialize, I think even in that scenario, I don't think the consumer stocks may outperform from here, because if real wages are falling at some point, it will hit consumption as well. So we have a pretty, I think from a strategy top-down perspective, we have been running an underweight on consumer.
When do you think the tipping point for PSU banks will come, where good loans, bad loans will start becoming good loans, and the real economic uptick will start getting captured for them?
See, we have become very positive on the PSU banks since early December. And this is primarily to do with two things. One is, of course, if interest rates start getting cut, then some of these PSU banks will start booking profits on their available for sale securities portfolio. So that is one. And second is, as you rightly pointed out, I think with an economic recovery, some of the bad loans may become good, and that is a good positive tailwind. So I think, valuations were quite cheap in December, and I think they still are, because, the stocks have moved up a notch, but I think they are still cheap. So we continue to like them. We continue to like banks as such, and within that now even positive on PSU banks as well.
Suresh, soon we're going to be dealing with Infosys' earnings. Do you have a blanket underweight on the sector, or are you selectively positive on names from the mid-cap IT pack, or for that matter a TCS?
See, we actually have been running an underweight on this also because, I think two reasons. One is, clearly these companies are plays on global growth, which is not very encouraging, though I think there are some small, positive signs now with the fiscal cliff issues addressed and Europe not blowing up, etc. The second reason is I think we thought the bulk of the rupee depreciation was done when it hit 55 because, it was primarily an inflation differential catch-up, and now we're probably going to maybe at the margin maybe even appreciate. But having said that, I think in my portfolio I've been running a big underweight. I think Infosys is the only stock I have, and we are neutral on Infosys and TCS from a recommendation perspective, and negative on pretty much everybody else. So I think we have been having this cautious negative view on the sector, though I have to admit I think some of the mid caps have done a little better than what we had thought. So I think IT continues to be interesting. If the business cycle does pick up in the developed markets, then I think the IT sector might do well. Obviously, Infosys has a special situation within that because the companies are trying to transform itself to move up the value chain, and it will be interesting to see what they say this Friday in terms of not only the numbers but more importantly their outlook and particularly an update on their strategy in terms of their move up the value chain.
That's the guidance from 5% to 3%. Will that easily knock off 200 rupees from the stock?
I'm not too sure because I think after every quarter I think it has seemed like a regular event. But my sense is I think maybe quite a bit of the bad news may be priced in on the Infosys name because I think it's not the first time. So I mean while it's very hard to predict, I'm not sure whether the stock is again going to take a big step down on that day. But, having said that, I think, it'll be quite interesting to see what update they have on their strategy because, the company has taken a big bet in terms of transforming themselves. And if it pays off, I think the stock could do quite well. And I think, the next few quarters, it'll be interesting to see how their business mix kind of improves towards the more value-added services.
Suresh, what's the rationale behind an overweight on Adani Ports?
See, we thought the stock was it's still quite undervalued, and with things probably likely to pick up in the power sector, etc. after some time, with the economic growth were to revive, then we thought this will be a nice way to play that, and we also thought, post Gujarat elections. The whole Adani group may re-rate a little bit because, there were some concerns around, whether BJP will come back, etc. And so my sense is, I think, this is a stock which we find as quite undervalued even at these current levels. I think we have been pushing it from 115, 120 levels. And, we quite like it at this price, yeah.
Suresh, some of these infra and asset owners, they do look attractive right now. And if I work with the assumption that the economy will turn around, then there could be multi-baggers in making. But to my mind, the biggest concern for some of these companies is that they keep on diluting. The minute, markets go up, Adani or GMR or GVK, they would be, raising money via equity issuances.
Yeah, see, we don't cover some of those mid-cap names right now. But, I think on the large cap side, we quite like L&T. We have a kind of a contra buy call on BHEL, which hasn't done that well, but I think, it is beginning to do somewhat well. But I think in an economic recovery, some of the large caps may do better than, because, mid caps, as you rightly said, there could be potential equity dilution given the high leverage that is there in the companies.
But in general, do you think because of government paper or fresh IPO or OFS, which is offer for sale, liquidity in this quarter could get challenged?
I'm not sure. I think, certainly the IPO pipeline is going to be stronger than last year. It's no doubt. I mean, the government is obviously, I find it actually quite encouraging that the government is trying various ways to bridge the fiscal deficit, whether it is, proposal to raise diesel prices 1 rupee per month, or whether it is, by selling some of the PSU stocks, etc. But, my sense is despite all this, is fundamentals are good. That is, India continues to show like a lower inflation, lower rates, better economic growth. I do think flows is not a problem because, currently the world is very starved of growth. And if India could grow at 6.5% or 7% real rate, I do think that will attract its share of flows.
Okay, Suresh, good chatting with you. We'll let you go on that note as well.